following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there had an interesting weekend and a fun weekend. My name is Mark Longo, and I will be your host for this jolly frolic through the world of options. I am joined, as usual, by the usual cast of characters, starting off with the man from the mountains himself, Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, how was your weekend, sir?
Doing well. I hear they got another man from the mountains this last night. We'll talk about that a little bit today, I'm sure. But yeah, it's always an exciting thing when the arch enemy of the United States is brought to justice. So I am riding high in the mountains of Illinois.
The arch enemy, I like that. The nemesis. That speaks a little bit to our tendency to personify our villains. We like our villains ensconced in one person.
I watch a lot of superhero shows with my boy.
He's kind of like Skeletor and Megatron's baby.
Pretty much, yeah.
If Skeletor and Megatron had a gay baby, it would be Osama bin Laden.
And that voice, of course, is none other than the greasy meatball himself, a.k.a. the Seabass, Mark Sebastian from OptionPit.com. Mr. Seabass, how was your weekend?
Oh, it was great. It was great. I've been flying around the country. I was flying around the country all last week. So it's nice to be back in Detroit before, as soon as I get done with this podcast, I'm driving back to Chicago tonight. So looking forward to another 4.5 hours in a car.
Oh, you're not in Chicago? You're in Detroit?
I'm in Detroit right now. Well, you see, the thing is if I'm going to leave for a couple of days, my wife doesn't like being in Chicago by herself, even though we have a 75-pound dog. So I drive her, my son, and my doggy up to Detroit, and she stayed with the in-laws, and then I flew around the country out of Detroit. So
because when I think of safe metropolitan areas, Detroit, baby.
Yeah, well, they're in the suburbs. The suburbs of Detroit are actually pretty nice. A lot of people would be surprised.
I mean, if you're telling me Utah or something, you tell me Salt Lake, maybe I'd give it to you.
No, you'd be surprised. I got you. Grosse Pointe. There's a lot of old money in Detroit. You got to remember that. It's not like the Fords moved to. It's not like the Forbes moved to Malibu.
Good old Dearborn.
They're still hanging out in Grosse Pointe, along with all the other rich folks. So the Chrysler family, the Iacocas,
Sebastians.
So yeah,
the old money Sebastians.
Yeah, no, well, exactly, them too. So you'd be surprised. It's actually got really nice suburbs.
And listeners, we will hopefully be joined in progress by the boys over at OX. They're having some technical difficulties, it seems like, on the Wi-Fi side joining us these days. So they're having a hard time joining the show, but hopefully they'll be here before the end and we can dive into the old express block for them. And with that, we're going to roll right into the trading block.
The trading block.
And welcome to the Trading Block. This is the section of the show where we discuss what's been trading, what's been moving the markets in today's session. And it was a pretty much unched on the day. Not much going on really. Down 2 handles S&P, down 3, a whole 3 handles in the Dow, down 9, a little over 9 in the NASDAQ, and the VIX cash up a little over a point, or actually about 8.7%, so a little bit of a move in the VIX cash. But other than that, not too much. And as Uncle Mike alluded to earlier, there was some big news in the overnight session. Of course, that other man from the mountains, actually, I guess the man from the suburban compound, you could call him,
I know.
was taken out last night. I was reading up on this a little bit this morning, and it's kind of hard not to. It's just a fascinating story. And apparently they've had his location somewhat nailed down in that compound for about 5 years. They knew someone had built this compound, and it was probably being used to house and protect a major terrorist figure. They just weren't sure if it was him or not until, I guess, recently. But I don't know. I think if you had a house where you were reasonably certain that Bin Laden was in, you think you would be knocking on that door a little bit earlier, I would think.
Yeah.
Just send the SEALs team in just to knock and say hello, see who was in there. But Uncle Mike and I were talking before the show, Mark, about just how, not a trading note at all, but just how jazzed, how excited, how fired up must those SEAL Team 6 guys have been to kick in that door. This has got to be the culmination of everything those guys have wanted and hoped for and trained for. I mean, they're out in the muck all day going after who knows what lord on every given day of the week, and they finally get tapped to go after, it's like they give them the chance to kill Hitler in the 40s. It's just, it has to be just, I mean, they must have been just on fire going into that compound last night. It must have been interesting. And they tapped the big boys. They got a chance to tap the Team 6 guys who they didn't want to mess around. Like, we're not sending local people. We're going to send the big boys in. So yeah, interesting stuff. And as Uncle Mike alluded to earlier, or actually I think in our pre-show conversation, we were a little bit of surprise at how little this really impacted the market today. Uncle Mike, why don't you tell that story about, you were telling me off before the show about your friend who wanted to trade off Bin Laden.
Yeah, it was funny. Like about 10, 15 years ago, when I was first getting into the trading world and trading my own account, a good friend of mine, he day trades the S&P E-mini. He's been doing it for forever, it seems. And but anyway, I just remember talking with him. It was back in, it was like 2002, I think. And he was just saying, I never trade off news. And then he showed me his charts, his indicators, and everything with which he used. And he said, but there's one thing that I would definitely trade off of. If I ever got any news that we caught Osama bin Laden, I would go long everything I had in a heartbeat, because the market's going to go up on that. So last night I was watching the news. And keep in mind, he's the most anti-news trader I've ever met in my life. So last night, I couldn't resist. As soon as I heard the news, called him right away, said, "You trading this?" He's like, "No, what's happening?" Because he hadn't heard the news yet. And so basically, he went long right on the news. I think he may have made or lost a point or two, but he got out right away. And so he called me like a half hour later, right before Obama spoke. And he's just saying, well, I think the savvy traders in this are going to be shorting this, because if the market hasn't moved more than, I think it was up 13 points, and it moved like 7 points right after the announcement. If it didn't move more right after that, then it probably wasn't going to move. So he was looking for opportunities to short it. So I guess the moral of the story is 10 years later, things can change.
Mm-hmm.
Yeah, I don't think it has the same punch, or packs the same punch that it would have had if they had caught him in 02 or 03.
Oh yeah, 02 we get a huge rally off of it, for sure. 03 probably the same. But 10 years later, I just don't think so. I just don't.
And on top of that, the market's up about 1,000,000% these days, it seems, from where over the last couple of years. So it'd be pretty tough to drive another. I would have thought back in 02 or 03, it probably would have given the S&P about a 5 to 7% rally on some news like that. That was always in fact, when I was working for Options Express, that was always an example that I would use. Let's say worst case scenario happens and the company goes bankrupt. Or let's say best case scenario happens and we catch Osama bin Laden. Markets go way up. That was the example I actually used for 4 years of speaking at OX when I was trying to demonstrate the platform. And I would have expected a lot more than that. But when you're in quite the bull market like we are, and Osama's not quite as scary of an evil man as he once was, or it's not as big of a figure as he once was, kind of makes sense that we didn't rally as much as we did.
And then, of course, there was some other news in the market today, or some activity in the market that was interesting, that we've been discussing this name quite a bit recently. Good old SLV, and we've been only half jokingly recently just saying, when is the last time this thing had a major down day? And we finally got one. SLV closed 42.83 today, down a little over 4 handles, or almost 9% on the day. So quite the profit taking in SLV today. I'm sure, Uncle Mike, you were glued to your screens today.
Yeah, today was actually, obviously we don't, for our clients that are in our silver collars right now, obviously this isn't a profitable day by any means, but what I'm excited about is when something happens the way it's supposed to happen, that gets me excited. Our general plan about the silver collar, once again, this is a general rule. It doesn't work every time, but this is what our goal is whenever we're doing a collar on silver, or pretty much anything for that matter, but in particular on silver. If we have an up market, we're hoping to capture 70% of it. If the market moves up a little bit too much, then we're probably not going to capture all 70% of it. But if we can stay between 60 to 70% of it, we're pretty happy with how the position is working. If we have a down market, then we're hoping to have about 30% of the down market, meaning if we're down 10%, we only want to be down 3%. And I did the math today on silver, on our silver position just for today, and we were down 0.35% of what SLV actually was. And the fact that we're down close to 9% on SLV on the day, I'm obviously not excited that we're losing money, but when it comes back, this is when we actually catch up with the market to where over time we believe that we're hoping to match the overall throughout time performance to the upside of silver. So am I still bullish on silver? Yes. Today, obviously, that was not the case, but we're protected and the options did what they were supposed to do, and I'm very happy about that.
And listeners, we are joined in progress, as promised, by good old Rob Kurzakowski from Options Express. And Mr. K, I'd imagine you took quite a few calls on SLV today.
Yeah, absolutely. The market has been kind of out of control, or on the upside recently. Just it seemed like we were moving up, $2 to $3 at a clip recently. So when I turned on my fired up the OX app on my phone yesterday, I was kind of surprised to see it down 10% in overnight trading. I thought that we may finally get some profit taking last Friday, and so I was kind of mentally prepared for it. Between that and the Osama bin Laden news, I knew it was going to be kind of a wild day of trading today.
I wasn't watching the news on SLV. Was this just profit taking, or was there actually some underlying or fundamental news that drove this?
Didn't one of the brokerage houses change margin? Didn't this start because one of the brokerage houses changed margin requirements to 25,000 to get involved with some of the futures, and that kind of set things down?
Yeah, and it's not just one of the houses. I mean, pretty much across the board, a lot of firms give very liberal day trade margins, and certainly on when a market moves up like silver has, people start moving away from, or firms start moving away from exchange minimums. So we've seen quite a few firms move away from exchange minimums. They start using multipliers where it's 1.5 times initial or 1.25 times initial. This is not something new to commodity trading firms. We've seen it in the past with some of the soft commodities, where they've really made a run up. You've seen firms even go to full contract value in some cases, like in the case of like some of the Brazilian spikes on like coffee frost, down in Brazil, where back in the 90s, where firms were basically saying you have to put up full contract value, if not liquidate, and that's kind of an extreme move, but I think a lot of firms just kind of saw the potential for a huge down day like today, and you see them basically have to take take action to cover both the protect both the firm and the client. And I think that that's certainly what triggered this. From what I've heard, it's been more. It was more than one firm that raised requirements. It was actually late last week, so kind of surprising it took this long. But when a market moves up as sharply as silver has, and it's not as deep of a market, say, as gold or silver, the potential for a day like today is certainly out there.
Yeah, there are not many commodities out there right now. Maybe a few, maybe gold being the exception, besides silver, where you could say, "Oh, this thing could fall 50%, and it's still arguably overvalued." So this thing, this thing has some serious potential downside to it if it starts moving in this direction. But Rob, where does OX fall on that margin spectrum right now? Where are you guys? What are you guys charging?
Well, we charge more than exchange minimums, and we have for certain commodities since futures were integrated into Options Express. So some of the more volatile commodities, recently we've actually in some of the energies last year we did move back some of the requirements, basically just go a hair above exchange minimums for like natural gas because where prices were. But when we see a market like silver, wheat, 3 years ago, where we really saw those huge run-ups in wheat, we started raising our requirements well above the exchange minimums, just because when a market runs up and goes completely parabolic, the potential for collapse is always there. And our risk group does a really good job of balancing, making sure that we're not pricing clients out of the market. But at the same time, futures traders are by nature love the leverage. I mean, that's the reason why they trade futures instead of ETFs is 24-hour access and the leverage that futures offer. Sometimes we get a little bit greedy, especially when the market's moved up in our favor. And virtually all futures traders have done it at one point or another, unless you're just a really meticulous person, is kind of use profits to kind of pyramid and buy more contracts. Well, when you have, it's fine and dandy when it keeps on moving up $2 every day, but when you have that one huge down day, you see all of your profits and then some erode really quickly.
If people aren't prepared for a downturn in SLV at this point, then I don't know what they're waiting for. I mean, we've been talking about it forever, and if they think this thing can only go up, and I'm looking at the numbers now, this is another over million contract day in SLV, 1.2 million contracts, nearly just 4 times ADV yet again. So I think this is the 3rd or 4th day in a row we've seen something like this lately. We're just orders of magnitude, ridiculous volume. And speaking of volume, before we walk away from SLV and good old silver in general, how are those good 1x2s you were working on there in SLV, Mr. Sebastian?
They're huge winners, of course. They all would have been doing great. The only one that would have had its problems would have been the 147, 162. But you should have been out of that on Friday, as that was already winning on the bounce back. All those, see, that's the power of when vol and skew get out of whack. You really have to take advantage of that. Not only did IV rise kind of for at the money options, but it absolutely got crushed for upside calls today, which tells me that people are not expecting the rapid increase that we had been seeing leading up to this.
Yeah, so, SLV upside skew just got annihilated.
Oh, just got annihilated. So anybody that was trading these 1x2s got exactly what I was talking about. Their at-the-money calls held a ton of value, the 46s, the 45s, the 47s. Anything above 50 just got smoked, okay? And so that is why you have to understand how vol movement affects a trade, all right? You can look at the Greeks and you can look at your little P&L graph and say, well, that looks horrible. No, okay? It doesn't, not if you understand how that position is going to move as the IV gate swings closed, okay? And that's exactly what happened. And traders that put those things on made a nice, hefty chunk of change.
Yeah, I'm looking right here as we're talking in this upside in May and SLV, just as an example. We were talking about these 60s and 62s last week that were 25-cent bid, 20-cent bid. These are nickel bid now, 3-cent bid in these things. So, yeah, this upside skew has just been completely devastated.
Annihilated. It was annihilated. It was Bin Laden.
So yeah, God help you if you were paying 25 cents for the May 62s outright. Then I suppose I suppose you deserve what you get if you're doing that.
I was talking to Jim Cramer about this on Wednesday morning, and he was in agreement with me that it was overpriced.
Oh, is this the name dropping section? Should I change the name of the block? The name block.
The name dropping block.
Right.
We need to get him on the show. When are we gonna get him? He needs to do a dual show with us and Oprah.
Oh, that'd be great.
Yeah.
That'd be great.
We'll see if OX can swing his appearance fee, and we'll be all set. All right, and that's going to do it for the old trading block. And with that, we're going to roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is the section of the show where we discuss the interesting and or the unusual. And we're not just talking about Mr. Sebastian. We're talking about good old options activity. And we're starting off with speaking of Mr. Sebastian, one of his favorites, the good old drug makers. We like talking about the drug stocks on this show. And the interesting and weird ways that they move. So this is also interesting because it's one of the few pieces of activity we could find that wasn't just pure earnings related. And so we're going to start things off with FRX Forest Labs Inc. This one closed at $34.74, up $1.58 today. This is the name that does about 1,800 contracts a day. They did over 14,000 today. And as we mentioned, this is a drug maker, and they had some interesting volume today. And we started digging around. It looks like the rumors of this one being a takeover target started off on some message boards and moved over onto Seeking Alpha and just kind of took off from there. And so that seemed to drive a lot of this upside bullish call volume we were seeing in FRX today. It was 6-to-1 calls to puts, so that'll give you an idea of where the paper was leaning. It looks like the bulk of the activity was on the old June 38, so they rolled them out. It's funny, you say June, you think that's so far out, but it's only 1 month off now, you know. The activity was heaviest on the old June 38s. We saw about 3,200 of these going up with previous open interest of 0 contracts. So there you go, all opening paper. The bulk of these are picked up for about 38 cents a pop. We also saw 36s and 37s in June's lighting up the tape as well with heavy buying activity as opposed to selling, a little bit lighter volume on those, about 600 contracts on the 36 strike and about 1,700 on the 37 strike. So all in all, it looks like upside bulls coming out. We also saw some trading in May, but it was a little bit more mixed. And then there was one 1,000 lot of May 36 call sellers who thinks this thing is overdone. And this is not going. They sold those for about 50 cents. So they're thinking this impending buyout is maybe, and this talk is a little bit overdone. And they're selling rumors from the Seeking Alpha message board, I suppose. Or maybe that's the guy who started the rumor, and then he hit the bids on the calls as soon as it took off. But anyway, so a lot of interesting activity going on in FRX. Keep an eye on this one. They may be a potential takeover target, or it might just be a lot more message board nonsense driving a lot of paper for no reason. We'll find out. I would imagine, judging by this paper, we'll find out in the next month or so whether that is the case. And then moving on to almost an identical ticker, we're going from FRX to good old FCX, Freeport and McMoran, copper and gold. They closed at $54.34, down 68 cents today. This is the name that's been pushing some numbers lately. They did about 93,000 contracts. They do about add 93,000 contracts a day lately coming up into their earnings. Today they did over 112,000. And I think a bulk of that ADV has been pumped up because this name had earnings recently this last week, so that ADV is probably not reflective of what they really do on an average day. Nonetheless, we saw a lot of very near-term activity in this name today, the bulk of it in the weeklies. So the traders were diving into the weeklies, picking up about 1,700 of the May 55's weeklies for about 95 cents, so 93 cents. So these are immediate upside calls. We also saw the May 57 halves go up over 13,000 times on the day on a previous open interest of just about 8,000 contracts. Actually, total volume on the day of about nearly 16,000 on those May 57 halves. And the bulk of those were purchased early in the day for about 29 cents. So, yeah, that one's hurting already. So yeah, they picked up the bulk of these calls for. Yeah.
Well, that's called Stennis Classic stupid paper.
Yeah, that's quality paper right there. These guys picked these up.
That is the guy I love selling to.
Picked these up for nearly 30 cents. They're trading 13 at 16 right now, so that should give you some indication of how well this trade is going.
Yeah.
Buy the dip.
If I had sold them, yes, I would already have closed that out and taken
the money.
Gone and bought a nice boat or something. So these guys picked up a lot of useless premium right about today. And we also saw 2,800. These guys are really, really bullish. 2,800 of the May 60s, the weekly May 60s, going up actually over 5,000 total on the day. The bulk of these, 2,100 of them, went up for about a dime. Those are also 3 cents at 6 cents, so those are winners as well. So yeah, this is just a lot of really, really, really speculative upside bullish paper in FCX. Interesting because like I said, earnings were last week, so this is not a near-term earnings spec or anything like this. This is just some people making some really, maybe there's some imminent news of some takeover coming on this, or maybe something else going on with FCX that is driving this paper. Right now, these guys need a serious move just to make back their trades. They're losing heavily to the downside already with only a half a session in their belt. So yeah, maybe this doesn't qualify as the smart paper right here, but nonetheless, these guys are lighting up the tape, and a lot of ridiculously near-term paper going up in good old FCX. Sebastian or Uncle Mike, you guys play around this name at all?
No, really.
Not in this one.
Not an FCX. I've a couple of times I've messed around with it, but it's just it's such a weird stock because you can never tell what's making it move because it trades in copper and in gold, which is fun. So, you're like, oh, I wonder what's moving Freeport today, and then sometimes it's like copper's up, sometimes gold's up, sometimes one's up, one's down. It's a very manic depressive stock. So
yeah, someone thought something was moving today, and they were putting a lot of money where their mouth was.
We see a lot of short term. This is certainly a trader's stock. I mean, a lot of the other miners, the BHP, the Rios, the Rio Tintos of the world, those are more position trading stocks because they're easier to read because they're primarily base metal stocks. People like Freeport because of the volatility, either short-term day traders. Also, we see a lot of premium sellers just because of the volatility. There is some pretty decent premium on the stock. But as far as our, we kind of, we know our clients pretty well, and the clients that do trade a lot of commodity based stocks tend to stay away from Freeport because of its unpredictability.
Well, someone should have told these guys today because they just dropped half their investment already in a couple hours. So yeah, not looking good. Maybe they shouldn't have taken on the old two-saw triple call stupid in FCX today in the weeklies.
Say that 10 times real fast.
Yeah, exactly. And then we're going to close things out with another old name we're kind of revisiting. We've talked about this one a few times in the past. Good old THC, Tenet Healthcare. This is another one actually that was moving.
Oh, nice.
Moving not on earnings, but actually on takeover spec. There's talk that this one closed at $6.69, down about 24 cents. They do about 6,000 contracts a day. They did nearly 37,000 today. The bulk of this activity moving on some unsolicited takeover offers for this one up. The offer is apparently supposed to be up at $7.25 a share from another company, Community Healthcare. But the shares are down, so obviously people are not thinking that deal has much of a chance of going through. We saw a lot of activity today. Like I said, over 36,000 contracts going up 6 times ADV. And the bulk of it, a lot of people coming in, gobbling up the old May 6 puts. You saw 13,000 of those going up today. It looked like, at first blush, it looked actually total of it looks like another block went up towards the end of the day. It looks like a total of 18,000 on the day now. It looks like at first blush, it looked like Strangle was going up, the May 6, May 7 Strangle. But then when you dig into it a little more, it's like the May 6 puts were being bought outright on a spec, and then the May 7 calls were bought as part of the May 7 June 6 call spread, went up 5,000 times. So there's a lot of, and also we saw another, and that went up for about 70 odd cents, actually about 60 cents. Looks like the trader sold June, bought May. And then of course there was another bit of selling out in the Jan 2012 7/2. About 2,000 of those were sold for in the neighborhood of 30 cents, also on the leg of a spread. So a lot of interesting activity going on right now in THC, with a lot of people thinking that this deal apparently is not going to happen. Unless you're talking about this guy buying some upside here. But other than that, yeah, a lot of size coming in and picking up those May 6 puts, thinking that this deal is not going to happen. Any of you guys watch this one today?
No, not really.
No.
Not really.
I'm trying to pick we're trying to pick the non-earnings ones, and this is what you get. You get these ones.
Yeah, these ones. Well, one of the ones that I thought was kind of interesting that was trading today was NYX. There's a lot of speculation out there that offers or bids are going to have to be raised, which they almost certainly will. There's a lot of rumors out there that Deutsche Börse is going to have to raise the amount that they pay for NYSE Euronext in order to, conceivably really approve the deal that they're trying to force with Euronext, because the NASDAQ ICE bid is so much superior to it. $1 billion is not chump change. And so there's a lot of cheap call spreads trading that the price is going to go up, which to me makes a lot of sense. It's a cheap trade. You can play the 40, you could play like the 41-43 call spread for 50 cents, and then if the deal price ends up being 42 or higher, you're going to do really, really well. So you can take a lot of cheap bets on the NYX deal, and I think there are traders out there doing that. You got
to love these ICE guys. They love just sticking their finger into these deals and just stirring things up and stirring up the pot and just throwing money into these deals. And even though I can't see the ICE and the NASDAQ bid making, that merger makes less sense than even the DB NYSE one.
Well, none of these mergers make sense. A merger that actually would make sense for NYX would be if they and the SIBO got together. That would be a beautiful merger.
Well, they'd take over all the remaining pit stuff and proprietary stuff that SIBO has that is of value.
They'd probably move it to Chicago. or they'd move all of their option trading to Chicago. Which should be interesting.
I don't know. It might be.
I don't think they'd want to make all the I don't know that you'd have all those pits on Wall Street, would you? I don't even know if they have a room.
Well, they just spent a ton revamping all the Amex stuff, and so I'm not sure if they're going to be that willing to give up on that. And Arca has that electronic platform, so I'm not sure if they'll be that willing to revamp all that and drive it to Chicago. I think the only deal that makes sense right now in pure additive terms would be CME gobbling up SIBO. That would be that just makes perfect sense. All these other ones are.
I think that's a foregone conclusion.
I would think so.
The way I hear it, just talking to people, is that most owners of SIBO stock expect to be bought by the CME, and most owners of CME or CBOT seats expect to buy the SIBO. I mean, I keep hearing that over and over and over again from the members. So whether that happens between the boards, who knows, but just the members and the stockholders, that's just kind of the rumor mongering I hear over and over and over again.
Yeah, we got SIBO earnings coming up in a couple of days. So
and they're all buddy-buddy with each other.
Yeah, Brodsky used to be at the CME for a long time,
Hey, does that... And even with the arguing of the Board of Trade, it was like getting an argument with your little brother or your older brother. Yeah, you think he's an a-hole. Yeah, you think he's wrong. But in the end, you'd rather be trapped in a room with that guy than some jerk from New York.
think we could go on with that for a while, but I think with that, we're going to close out the old odd block and roll right into the express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is the section of the show where Mr. K, Mr. Special K himself, just goes on a rampage of options and futures knowledge and leaves our listeners just lying wasted and overwhelmed with knowledge and information at the end. So, Mr. K, by all means, begin your rampage, sir.
What we've seen last few days here has been SLV, and more SLV. As far as our order flow, actually, I've moved over to the execution desk, so I have a little bit different perspective. I'm still helping out the trade desk and dealing with customers, but we're actually seeing. We actually saw this is the first time we've seen a true fire sale kind of in SLV. Interesting on a lot of our commodity clients that do trade very diverse portfolios. Fortunately, we're not weighted too heavily in SLV or in silver. So sometimes when you see these huge sell-offs in like crude oil or in gold, it spreads to other commodities, and it just begins the domino effect of just this massive sell-off. And fortunately, that it didn't happen this time around with silver. It seems a lot of our SLV traders were heavily concentrated in the precious metals and weren't as spread out. And I think that is something that a trap that we all as traders do fall into is you kind of have your favorite stocks and your stocks or your ETFs or your futures that you just happen to do really well trading. And for traders, it's been one heck of a ride with SLV. We actually, just a couple weeks ago, I was talking about how some of our traders were actually rolling out to further out months, and unfortunately, a lot of those back months did get crushed as well. Some repositioning, but fortunately for the option traders, the SLV traders, a lot of those traders did take those profits from their earlier trades, and we'll live to trade another day. The futures, one interesting thing, I don't know if this has been brought up on the show, is how unique all the exchanges are as far as how they deal with stop orders. And unfortunately, the mini NYSE Life silver contract now moves as much as the big silver did when I first got into the business 10 years ago, and actually probably more so, even more so dollar-wise than it did, than the big silver did 10 years ago. And the NYSE Life, simply if your stop is blown through, it's like you don't have a stop. The exchange just rejects it and uses their price banding rule. The CME is a little bit more forgiving with how they deal with their stops. They use a protection point and basically work it like a stop limit. And again, and then there's the one problem is if you are trading the minis, the cash settled minis, the protection point is there, but it's almost like not having a stop because of the lack of liquidity. So using an alert triggered order, if you are a futures trader and say you happen to be very fortunate and got on the short side of the market late last week, early or near the highs midday today, using an alert triggered order that we have, it's essentially a contingent order, may not be a bad way to a bad alternative to stop, although it's not perfect as well, because in these volatile times, the exchange is even rejecting market orders. So we had quite a few market orders reject last night. Even the CME rejected some, and then there's considerably more liquidity on the CME than there is on the mini NYSE Life. And now, finally, moving away from the commodity stocks, and most notably the silver stocks. Lately, we've seen a lot of earnings plays, and I think that I don't know if it's just a feature of the bull market where a lot of these stocks have moved up in value to levels where maybe traders used to buy, the stock was say $25 a year ago. Now the stock's maybe in the low to mid 30s, and the options have gotten a little bit pricier. We've seen a lot of traders take advantage of using a bull call or bear put spread on earnings, which does give you the ability to make up for buying a lot of that time premium. You're offsetting it by selling a lot of that time premium. So sometimes we've seen spreads where like RIM last week, where it was just RIM was just a bloodbath. Some of those near them or out of the money puts didn't move up as much as many traders had expected. However, the premium on the further out of the money puts, the time premium eroded at a quicker pace. So we saw some traders actually get better returns by doing a bear put spread versus actually buying puts outright. And I think that's kind of important going into this earnings season, because a lot of traders fall into the trap of buying up all this premium, getting into the kind of the excitement of earnings season. And but other than that, it's been a very we haven't seen a lot of trends as far as what stocks traders have really been in. Sometimes you get into months where traders are primarily trading these 10 to 15 stocks, and we haven't really seen that lately. We've seen a lot of very mixed paper coming through, so I think it's the trade du jour that or the earnings du jour that traders have really been trading on lately, and considering that we're just in the midst of earnings season, that's probably something that's going to continue here for the next few weeks.
And that's an interesting point, that the traders who are taking more nuanced positions in terms of volatility and skew than just going out and outright buying premium are performing better than during this earnings season. I think that probably won't come as a surprise to a lot of people, but it's interesting to point out nonetheless. I think that these people who take a little bit more time and effort into their approach.
Well, the funny thing is, you'd be shocked how many educators and there are out there saying, "Oh, you don't need to understand volatility. You don't need to know the hard stuff." And it drives me batty, because that's the stuff that differentiates people who make money from people that don't. You either get a guy like Tusaw that knows, that can tell you the stuff for you, or if you're going to be self-directed, you have to know as much as a Mike Tusaw or Mark Sebastian or if it's possible, a Rob Kurzakowski. Otherwise, you're just at a disadvantage.
Not possible, sir.
Otherwise, you're just at a huge disadvantage, because a guy like me will just take you out. I'll just eat you for lunch. I'll just destroy you. Mike.
It goes back. Yeah, foaming at the mouth here, man.
Can you say, you just sounded really a lot like Hulk Hogan? Can you say, "Listen, Mean Gene"?
Well, Mean Mark. Well, on a serious note, though, you make a good point. Theoretically, if you know for a fact you're going to hold a covered call until expiration, and you know that there is a 100% chance that that's going to be the case, and you're going to just let the call either expire worthless or let yourself get called out, then yeah, you really don't need to understand volatility. But I know for darn sure I wouldn't want my money involved in something that I didn't understand. So with that in mind, even a lot of our strategies, we let options expire worthless on short puts, and we're fine getting assigned on certain things. But if I see an opportunity based on volatility, or if we like with what's going on with silver, or if there's something going on, I'm definitely going to take advantage of it. It goes back to the Christmas Visa puts that I think that I talked about a couple months ago, in that we left an extra protective put on the table because it was a penny, and we didn't want to take it off because it would have literally cost us money to take it off, and it wouldn't have made sense for us to do it. And then the next day, Visa tanked, and the person that was on the other side of that trade that was just going to let it expire worthless, they helped my clients quite a bit on that because of the fact that we actually, by accident, fell into double negative deltas. We weren't trying to, and it was just more of a way of saving a commission. But you need to understand risks like that when you're doing things like this.
It's funny. I give David Fisher a hard time all the time about not getting rid of those fees for closing out the shorts that are a penny or a nickel or less. But in this scenario, that made you a ton of money, so maybe I shouldn't give him such a hard time.
Well, there's a difference between longs and shorts too. I don't think you need to. I do agree with you on the. I mean, it's silly that they don't close up, nickel or less for free. But, on the long side, they should charge whatever. Because if you're selling a penny option, that's such a waste of time. So
yeah. One thing that we can't really give trading advice per se here on the trading desk. We can kind of steer clients in the right direction. I think that what we've seen from a lot of educators out there is that people get overwhelmed when they first start trading options because they traded stock and all of a sudden there's all these moving parts and they get overwhelmed by all that. So the educators try to do is dumb it down to the point where it's too simple and they just miss the whole, miss very important parts of the equation. When we have customers that first start, the relatively new traders or traders that have maybe traded some failed option strategies, what I tell them is, you don't have to go out and spend, hundreds of dollars on textbooks or courses. I mean, if you want to take a good course and you want to be mentored, that's fine. But just go out there and actually learn the basics of options. Learn what the Black-Scholes model is. You don't have to be a human calculator and be able to compute all these numbers in your head. But at least take the time to understand, this is why, I bought a call going into earnings. The stock jumped up, and my call is either flat or down a little bit. It's because you bought up all that vol, and just go out there and learn as much as you can. I mean, there's a lot of free information out there. The Options Industry Council puts a lot of information out there for free, and there are a lot of good services like Know Your Options, which you'll actually have somebody that will go through all these things with you. But going into I just know that a call, you buy a call if you think it's going to go up is pretty much dooming yourself.
Since we're talking about free services, I would be remiss if I did not plug the Options Insider as well, since we are out there on the free end of the spectrum, and we do a lot of that stuff as well.
Well, and it just takes some good reading. I actually, a couple days ago on my blog, I put up kind of what I call my 4-phase reading list, and it's just kind of 4 books that if you read from 1 to 2 to 3 to 4, you'll have a really dynamic understanding of how options trade, and then you can supplement from there. And a lot of people just want it easy, and guess what? Easy doesn't work. All right, it just never mind. I had a horrible joke I was about to go with, and I'm pulling it back.
I could see you going to the dark side, and thankfully you stopped yourself.
That was about to get a major edit, folks.
All right.
And it's not just option pricing, but anything trading wise. I mean, I look at charts all day long. I scan every liquid commodity market every day, and I'll go back and I'll reread some of the technical analysis books just kind of go over the finer points of things, because you kind of get into a trap where, markets move in a certain way, they happen to fall into these patterns, and then you kind of forget about other patterns that you see lining up. And sometimes when the market is behaving in a certain way, you kind of you fall into bad habits.
All right. You do, and then the other thing that I tell people too. Let's say that if someone's wanting to get into the trading business, and I'm not talking about the investing side, and I'm talking like on the trading side of it, like what Mark does. You're typically aiming to make the salary of what a doctor or a lawyer would do. And if you think it's going to be easy, what makes you think that you're so special that you can all of a sudden make that kind of a salary without any type of training, without taking your lumps, without just making sure you're paying your dues and going the long route? In my career, I estimate that I've spoken with 10,000 people, and that's just a ballpark estimate. I think I'm being conservative with that, and I've had, I don't even know how many one-on-one conversations with people. And oftentimes you'll see on late-night infomercials people saying things like, I took $100 and turned it into $8,000 in 3 days. And I believe that a lot of those stories are true, but where's the follow-up? Where's the next trade? How have they been doing continuously? So if anyone is out there that has taken maybe $1,000 and turned it into $100,000, theoretically, I think I should have met most of those people. In my career, the get-rich-quick people, and I mean rich, people that have taken $3,000 and turned it into $100,000. I mean, like the 100-fold returns. I've met less than 5 that have even claimed to have done that. And if there's anyone that should have met these people, it should have been me. So in terms of the time, the effort that you need to put into being a trader, folks, I think it's definitely doable. I wouldn't be on this show if I didn't think it was, but it's not quick, easy money.
And on those happy notes.
That was wonderful, Mike.
Sorry, you got me on my soapbox.
I love that, Mike. Can you? You know what you should do? We should put what we need is like a painting of an eagle soaring, and then that entire quote underneath, and then we could sell it as one of those motivational things.
Or it can be what closes out the channels at the end of the broadcast day with the flag behind him. He can just talk about getting rich
exactly. No, I was thinking I could put it in my office. It'd be awesome.
With your
that
slinky.
way, when people sat down with me, they'd know I was serious. I was under the tutelage of Tusaw. Tusaw's tutelage.
All right, and do you want me to start yelling, they know nothing?
Nothing!
All right, and I think that's going to do it for this extended but interesting express block. And with that, we're going to roll right into an abbreviated Around the Block.
Around the Block.
And welcome to Around the Block. This is where we talk about what's on the horizon and surprise, surprise, what is on the horizon is earnings, and more earnings. We have a whole batch of earnings coming out this week, starting off with, we were just talking about the CBOE. They do have their earnings on Thursday before the close. Before the open, I believe, yeah. And so on Thursday, so they're early. So last trading day for them will be Wednesday. And this is one of those ones where we've talked about them a little bit in the past, and they're not exactly an ideal for options players looking to come in and play some volatility or play some earnings, because they're just not liquid enough yet, and they're not exactly a good trading name for options. We're also seeing Mr. Grigas's and my favorite, good old Tesla, on the open or after the close on Wednesday. We've got GM. I know Uncle Mike, you're big on Ford. You got any positions going on in GM?
I do not.
Yeah, we have GM on the before the open on Thursday. That'll be an interesting one to watch as well. Mr. K, I know you like the tech stuff. We have Garmin on Wednesday before the open, and I'm always asking myself how much longer standalone GPS as a business will survive. This name surprisingly has had a decent run over the past 6-8 months, despite the fact, and they're up like 20-odd%, even though you'd think standalone GPS would be going the way of the dodo with smartphones and everything else taking over that functionality. But c'est la vie, Garmin continues to surprise to the upside every now and then. So if you're looking for some interesting earnings plays and some volatility, Garmin may not disappoint after all. And then, of course, we have also on the tech front, we have Electronic Arts after the close on Wednesday, and then their counterpart, their nemesis, Activision, next week on the 9th. So a lot of interesting names coming up. That's just a few of the ones we're watching. What are you guys watching over the next few sessions?
There's a lot of energy stocks having their announcements this week. Right now, I'm actually watching Chesapeake Energy. They just announced, and they're down a little bit, but we're short the 31 puts, so I think that we'll be okay for this month. And even if we're not, more than happy to own that stock at the 31 level. Stone Energy, we have a position in that. So a lot of energy stocks are having their announcements this week, and I've been fairly cautious on these going into these announcements, in that I've been doing combos, but in a lot of cases we're doing just simply a short put right now, a little bit out of the money. And if we get a pullback, great. If not, well, we made some money on the short put. So that's how we've been kind of being a little bit cautious going into the earnings announcements on them.
You do combos a lot over at Know Your Options?
Yes, sir.
Interesting. You don't see combos employed very often these days, at least not on the retail side anyway.
Well, what's been happening a lot, what's been kind of interesting is that Chevron pays a dividend, for example, and this one, I don't think it's there right now, but it might be. Our May puts are expiring soon, so we'll see. But what we did on Chevron a couple months back is we were selling front month out of the money puts, and because of the fact that it pays a dividend, that lessens the cost of the call spread. And so we were buying call spreads out in June, September, or several months out. I don't know if I don't have the exact months in front of me right now, but we've been buying longer term call spreads. And then after a month, we get pretty close to a zero cost basis call spread. Try saying that 10 times real fast. Zero cost basis call spread. And the put expires, then we can start the process all over again. And we can build up a pretty sizable position without taking on a lot of risk. So that's what we've been building, a lot of those in the energy lately. But over the last couple of weeks, we've just been a little bit more conservative in just selling the puts.
Yeah, interesting. Usually the combos and other things like that are employed in stocks, like you mentioned, with dividends, or have some other reason you want to have a position in the underlying that you can that give you some value added there. Front
month premium was just too tempting to pass up. And that was it, whether they had a dividend or not. Chevron was just an example that it worked out perfect. And we're fine giving up the dividend, because obviously the dividend is what caused that to be so easy. But there were a lot of other energy stocks that were allowing for that to happen.
And Mr. Seabass, what are you watching over at the pit?
Well, we do have employment numbers this week. I don't know if you guys remember that, but
we long since stopped looking at the economic calendar. Who watches that?
I know. I was having a discussion with Jeff Ogden on Friday, and he thinks that there's a separation of economics and the stock market, which I don't know if I buy that completely, but I think there's a reason why we've seen implied volatility rally for about 5 or 6 days straight. And I do think that it has something to do with employment numbers and some of these economic numbers. Now, there's an old saying that my outlook is my position, and so that could give you a hint as to what the way I'm currently structured. So,
yes, we don't do the disclaimers here on this show. Let's just assume everyone's along, everything they're talking up, and short everything they're crushing, and then everyone will be happy.
Exactly. So, I do feel like we're at an interesting pass right here, where I do think that we saw a little bit of a bottom in IV a couple of days ago. Now, I don't think we're going to go to 40, but, I think 19 and 20, folks, at least in the short term, get used to 20% being a high VIX, okay? That's something you're going to have to get used to, and I think we could get there again in the next couple of days. I do. So, on that note,
I don't know, 20% with the ATM at this high in the S&P is higher than you might think.
Yeah, exactly.
It's all about context with the old VIX. And then, of course, your buddy, your other buddy, Bill Luby, he likes the housing numbers, right? He's a big housing guy.
Oh, yeah. He is a big housing. That was a good one, but I think employment's starting to matter again. Especially with gas prices.
Now that we're down at 9.5 or upside 8% of unemployment.
Yeah, right. No, I think it's the gas though that matters. Gas prices.
There we go.
So,
and Mr. K, what are you watching for the next couple of sessions over at Options Express Land?
Well, kind of looking at the unemployment numbers, I'm seeing if how long these funds have gotten in the silver futures. If we're going to see some some of the spillover in other commodities. We didn't see it, necessarily today. We did see it drag down gold, and actually copper was higher despite silver getting absolutely pummeled today. But I think we have another sharp day or two of selling off. I think we may see more widespread selling. Also interesting to note that they did raise the requirements again on silver. I just got the email a few minutes ago. So looks like the CME group raised silver. So if your firm is using some type of multiplier above exchange minimums, expect your requirements to go up again. That could shake some more lungs out of the market.
That'll hit it again tomorrow then.
Yep. But yeah, those are the two main things I'm watching, other than obviously the earnings season.
And that's going to do it for the Around the Block segment, and that's also going to do it for this episode of the Option Block. I want to thank all of my cohorts, my partners in crime, for coming on the show. And starting off with you, the man from the mountains himself, not that one, but the other one. What is coming up at Know Your Options Inc. that you want our listeners to know about?
We're just still talking to the people and trying to expand onward and upward. We have more people working with us now, so give us a call. Stop by our website. No special events going on right now. We're just really focused on managing the money, as we always are. But we're just trying to get everything in place to create a newer, better product for everyone involved. We're very excited about everything going on.
Yeah, I had an interesting meeting with your better half over there, Mr. C, and there's a lot of fun stuff cooking over at Know Your Options Inc. So it's pretty exciting. And then, Mr. K, what is going on in Options Express land that you'd like our listeners to know about for the next few sessions?
Well, tomorrow we have our monthly Futures Outlook with Jim Wyckoff. He's always both entertaining and informative. Gives you about a solid hour of what he expects the futures to do this month. Also, on the new product front, we're going to have Russell Rhodes from the Options Institute on Wednesday discussing gold VIX options and futures. So with gold and silver being so popular among traders, I think that certainly any gold related products are probably going to catch on fairly quickly, or at least hopefully going to catch on fairly quickly. But those are the two big educational events that we have this week.
And then, Mr. Seabass, what is going on at the pit once you get back from good old 8 Mile?
Well, I am making a presentation tomorrow for the ISC on it's a more beginner strategy. It's on non-directional spreads. And then Saturday, I'm doing an all-day event at the CBOE on how to trade the VIX. It's me and Russell Rhodes. We're going to talk for a good 8 or 9 hours. We're going to cover everything there is on VIX. VIX futures, VIX options, the VIX ETNs. We're even going to talk about gold volatility. Just a big, really kind of intensive discussion on VIX. And if it's a subject that you really have interest on, I don't know that there's a combo of two sources, aside from maybe Dom Salavino at the specialist from Group 1, that understands this product as well as the two of us. So I think as a combo, it's going to be a lot of fun. So
obviously, people can sign up for that at your website, right? Do you have a link to it on optionpit.com?
Yeah, we do.
I'm looking here on SIBO. I'm trying to find it on the SIBO website.
Yeah, it's on SIBO under seminars. If you go to cboe.com and you go under education and under seminars. Okay.
It's buried under three layers of
VIX.
navigation. Yeah, there we go.
Yeah, it's under how to trade the VIX, and it can be done live. If you come in live, I will take you out for beers afterwards, or it can be done via online. So it's going to be a really good time.
Yeah, so listeners should swing over to the SIBO or to the CBAS website, optionpit.com, and register for that one. And, of course, if you want to hear more about the unusual activity or any of the breaking options news, such as the 10th exchange and all the other fun stuff that's going on in the options market these days, then surf on over to theoptionsinsider.com. If you have a question for the show or for the host, you can post it in the Option Block forum over there at the website. And we also just did a really interesting show with Professor Robert Engel, the Nobel Prize winner for economics back in 2003, who did create the old Arch and Garch models that are become so prevalent in volatility and volatility trading these days. If you want to check that out, then you can surf on over to theoptionsinsider.com and click on the radio tab, and you'll find it there. So a lot of interesting stuff going on, and I want to thank, of course, all of our listeners for downloading and subscribing to this show and making it such a success, and we'll see you next time right here on the old Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.